If you've been watching the Ontario housing market and feeling a little confused about whether things are getting better or worse, you're not alone. The data is actually sending mixed signals right now. So let's walk through what's really happening and, more importantly, what it means for you depending on where you stand. Let's start with the headline. CREA, the Canadian Real Estate Association, just revised its 2026 sales forecast downward. Again, back in April, they'd already lowered expectations once. Now they're doing it a second time. And instead of the small increase in the sales they originally predicted for 2026, they're now expecting a 1.4% decline compared to 2025. So what's driving that? A few things stacked on top of each other. High oil prices pushed inflation up, which raised the possibility of the Bank of Canada hiking interest rates. That sent bond yields up, and fixed mortgage rates jumped as a result early this year. Add to that a faster than expected drop in Canada's population, and you get a first half of 2026 that came in weaker than everyone hoped. But here's where it gets a bit more encouraging. June data actually showed national home sales edge up slightly from May, and activity was up almost a full percent point compared to June of last year. CREA's senior economist, Sean Cathcart, said this builds on some positive momentum that actually started back in May. His words were that it's a market that's only just finding its footing. So we're not talking about a full recovery yet, but we're talking about a market that stopped falling and started to steady itself. Now, here's the part that matters the most if you're in Ontario specifically. For the past 4 years, Cathcart described Ontario as ice cold, alongside a pretty chilly BC, while other markets across the country stayed hot. Prices here are still down. The national benchmark price sits around $657,000. But Ontario, BC, and Alberta are all still below that in their own regional numbers. The good news is those declines are shrinking rather than continuing to widen, and prices across the country do seem to be stabilizing. Looking ahead, Cathcart expects Ontario and BC to actually tick up slightly by the end of the year, even as other regions like the prairies and Quebec start to slow down. So the pattern from the last 4 years might genuinely be shifting. One more thing worth flagging, a lot of homeowners locked in historically low mortgage rates during the pandemic on 5-year fixed terms. Those terms are now coming up for renewal at higher interest rates. At the same time, the market is still working its way back. That combination has put real financial pressure on a segment of homeowners, and it's part of why the broader recovery has taken longer than expected. So where does that leave things? In a decent spot if you know how to read it. A market that's stabilizing after a rough stretch tends to create opportunities for people who are paying attention. Let's break down what this actually means depending on where you fit in. If you're a buyer in Ontario right now, this is generally a favorable window. Prices are still down from their peak. Competition has eased off compared to the bidding war years, and you have room to negotiate and do proper due diligence instead of rushing a decision. Use this time to get pre-approved, take your time comparing properties, and negotiate with confidence, because when the market firms up, that leverage will start to fade. If you're selling, the shrinking price declines are genuinely good news. The sharpest part of the correction seems to be behind us. That said, this isn't the moment to underprice and hope for a bidding war. The smart move is to price realistically based on your specific neighborhood, present the property well, and work with an agent who understands the microtrends in your area, since conditions can vary block by block right now. And if you're an investor, periods like this, soft but stabilizing, are often when the best long-term positioning happens before the recovery becomes obvious. The key is doing the math with today's mortgage rates, not the ultra low rates from a few years ago, and focusing on areas already showing that price decline is shrinking pattern. Short version is this. Ontario's housing market has had a genuinely tough 4 years, but the data suggests it's finding its footing rather than continuing to slide. Whether you're buying, selling, or investing, understanding exactly where things stand right now puts you in a much stronger position than waiting for perfect certainty that may never come. If you want to talk through your specific situation, feel free to reach out. And if this helped clarify things, consider subscribing. There's a lot more shifting in this market over the next few months. This is Rasha Ingratta, Mortgage Agent Level 2 with Mortgage Intelligence here in Windsor, Ontario since 1999. Thanks for watching, and I'll see you in the next one.